Good morning, good afternoon, good evening. Welcome back for another video. In today's video, I want to present to you a base case as to why I do not think that stocks and crypto are going to be putting in new all-time highs for the rest of this year, but also how you can make money for that and how you can prepare for what I believe in 2026 and 2027 are going to be very good years to accumulate and make good returns on stocks and crypto. So there's opportunity ahead. I want you to hear that from me. But okay, and I also in this video want to share with you just an invalidation that I would be looking for in terms of, okay, you know what, it's back on. And let's see the end of 2025 being very bullish, or even right now, soon, this month, next month being very bullish. Yeah, there's possibilities for that. But okay, before we dive on into this, smash up that like button, subscribe to the channel. Consider joining this channel as a member. We have member live streams every Tuesday and Thursday around noon Eastern time, and those are available to watch. And I'm always willing to answer questions from members. And remember, this is not financial advice. This is for entertainment purposes only. Please do your own research. I am not a financial advisor. Okay, so what do we have in front of us right now? We have the S&P 500 today, along with the S&P 500 in 2020, 2008, and 2001. And so this is a key level that I'm looking for. I did already make a short talking about this, but this is a key level that I'm looking for in terms of invalidation or validation of my thesis in terms of what the rest of this year looks like. So here we are, top left square. We have the S&P 500 today. I'm going to share with you just a single panel of that and give you my thoughts for the remainder of the year. We very clearly lost the 200-day moving average. We had a back test and got rejected really hard at that 200-day moving average. And sure, you know, we had yesterday Trump announcing a 90-day pause on the tariffs, and then increasing tariffs on China. And we saw a nice pump yesterday in response to that. So good, but we are still in lower high territory. And so we'll see that in the next video or next panel. So next tab. But okay, this seems to be playing itself out, that we are in a downtrend and we are going to continue to be in this downtrend for a period of time that may last a few months, or worst case scenario, maybe even a year, maybe 2 years. It's possible. I don't think 2 years or anywhere close to that, but we are in a downtrend. All right. What would invalidate that? Well, look at 2020. We had that COVID crash, and there are some similarities between the Trump tariffs and the COVID crash in the level of fear that was brought into the market. But then we had a V-shaped recovery, broke through, and then did two back tests of the 200-day simple moving average. This would be our best case scenario for the S&P and for crypto, knowing and acknowledging that crypto follows the stock market. Okay, so that would be the best case scenario. What would be probably a more likely scenario would be a repeat of 2000 or 2008, 2001, excuse me, or 2008. So bottom right here, bottom left, excuse me, where my head is kind of in the way, we had the S&P 500 lose the 200-day moving average, do a couple of back tests here before the great financial crisis of 2008. That started in 2007, the losing of the 200-day moving average, a couple back tests, and then we had a big dump. And then the S&P 500 in 2000, starting at the end of 2000, lost the 200-day moving average, did several back tests, just very cleanly rode along the line of the 200-day moving average before bottoming out in 2002, and then had sort of a triple bottom in 2002 going into 2003. But then with all of these, once we reclaimed the 200-day moving average, it was game on. It was time to go long and to ride that for several years. And so we've lost the 200-day. Best case scenario, COVID crash. More likely scenario would be a replay of 2008 or 2000. Let's just dwell in reality for a little bit. So here's kind of the scenarios where I'm looking at, or, you know, we could have a repeat of 2022. That would also be, I think, a good scenario here. But kind of a replay of what we would be looking at here would be we've lost the 200-day moving average. We got rejected there. And we've also gotten rejected at this trend line. So I am wondering if we do have another move up to the trend line here, and then lower low, lower high, lower low. How low do we go? Well, we'll see. I would think that, 2022, we had a 27% drop. If that was similar to this time around, we would go down to around 4,400 in the S&P. I have more like 4,250 as a target for a 2022 like bottom, while also being of the mindset that we could go much lower. I really do think we could. And a big reason why we could go much lower is because of the yield curve inversion. And we'll get to that in a second. But what would invalidation of that be? Let's climb here. Let's break through this trend line. So a breakthrough of the trend line and possibly a back test, a move up, get rejected. First rejection for sure at the 200-day moving average. So rejection, move back up, breakthrough, back test, probably a double back test of the 200-day. And don't worry about the time frames here. I'm just drawing some stuff here. And then boom, maybe end of this year, we're in all-time high territory. So again, if this is how it plays itself out, then my bias will shift entirely. We break through that 200-day, we back test it, I will be very bullish. I will be a mega bull. But again, trying to dwell in reality, I just need to point this out again. I've talked about this a lot. We have had recently the longest yield curve inversion ever. I mean, 1980, early 1980s, late 70s was all sorts of craziness, but at least there was a point where the yield curve got uninverted, but then it went right back down, and we had two recessions very close together. We had another one in the late 80s, had a recession in the early 90s, post yield curve inversion of April 2000, had a recession in 2001, and then a pretty long, it doesn't look like it on here, but fairly long yield curve inversion in 2007, 2008, and then the great financial crisis. What comes next after the longest yield curve inversion ever? I mean, we are most likely in a recession right now. It's just, Atlanta Fed projected 3.4% negative GDP for the first quarter of 2025. Second quarter, I would assume, is also going to be a negative quarter. By that definition, we are in a recession, or we will have been in a recession. And, the powers that be, they kind of jumped around a little bit in 2022 and didn't call that a recession. That was by definition a recession. This is also going to be they will not blink at calling this a recession. That's for sure, for political reasons. No comment, I suppose. So what does that mean? Well, first of all, a lot of people are blaming Trump for the negative performance in the stock market. He has certainly exacerbated things, but you can see this peak here in February of 2025. I would have been of the mindset, if Kamala was president right now, I am absolutely convinced that that would have also been the peak, or somewhere around there, somewhere in February of 2025 would have been the peak, and we would have started a new downtrend. And so maybe it would not have been aggressive as this downtrend, but it seems like Trump has done some work to kind of rip the Band-Aid off quickly rather than later. So how do we make money off of this? There's opportunities to profit off of this. Okay, Bitcoin's right now, as the moment I'm making this video, in the 80s. Honestly, I'm sorry to say, I'm looking to exit most of my crypto. Maybe somewhere between $84,000 and $88,000 Bitcoin. I'm going to be looking to exit. And what would be an invalidation of that? Breakthrough 91.8, which was a key level of support for about 100 days between, I think, November and February. And so we break through 91. I'll be more interested in buying that. But as of right now, I'm looking to exit most of my crypto somewhere in the 80s, between $84,000 and $88,000, and for Bitcoin. So exiting all of my crypto at that time, or most of it, not my Bitcoin, not my he. Okay, anyway, but I still see lots of opportunity. I see lots of opportunity to profit off of this in the short term and over the next several months. So here's some things that I have on my radar. A couple of ETFs here. These are inverse ETFs. Now, on a long enough timeline, I would not recommend these, but for short-term gains, I would. So you have the short S&P 500 ETF. So when would I be interested in buying this if we saw the S&P One, if we get up to this trend line, I will be buying a lot of this for short-term gains, percentages, not X's, some decent returns to hedge some of the stocks that I already have. If we got up to the 200-day moving average again, I would be buying tons of this ETF again for short-term gains. Now you have to be careful with SH, with SQQQ, with any inverse ETF, because let's show this on a long enough timeline. I mean, it's not sustainable. Now, of course, the S&P 500 has been in an aggressive uptrend since 2008, minus a few blips here, but I don't think this is correlating perfectly. So again, you're not hodling this. Even if we were to have a repeat of 2008, you are not holding on for dear life with this, but you are in it for some gains. I mean, since it bottomed out in February, this is up a decent amount. It went from about $40 up to 50, 20% gain in, as we've seen, a 20% loss in the S&P. Another one would be SQQQ, the NASDAQ short ETF. Same deal here. We are not holding on to this for the long term, but there's some short-term gains to be made. The NASDAQ peaked in late February. This was at $26. It's currently at $37. It got as high as $52.97. So could you see some decent returns on this as the NASDAQ and as the S&P are putting in some gains? Sure. Yeah. So those are two options for short-term gains with taking advantage of what I am quite convinced is going to be a continuation of a downtrend. Would love to be wrong, but if you are more long than short and you want to hedge your bets, I think these are good options. Another thing, I talk about this in my trading journal, which you can see me talk about during my members' live streams, which I make available for viewing for the public. But right now, right at this moment, I have zero confidence opening any longs on altcoins or buying spot. And nothing that happened yesterday with the Trump 90-day pause has changed my opinion on that. I will not be doing so. I will not be opening longs on altcoins until we see higher highs in the charts. But I think there is opportunity still right now to do well shorting altcoins. And so what would change my mindset on that? Bitcoin above $91,000 would be a good start. Seeing a higher high, we are just in a clear downtrend. Seeing a higher high in the altcoin market cap, at the very least, seeing a higher high would make me more interested in longing altcoins. Right now, I think it's too dangerous of a game. So any particular altcoin, I'm looking for stochastic RSI to enter overbought territory. And then I'm looking at a few other indicators to determine whether I am interested in shorting that particular altcoin. I'm really right now, I'm sorry to say this, I am establishing some longer term shorts than what I usually do, but not right at this moment because altcoins are very oversold. So I want to see altcoins get into overbought territory. But once this downtrend is broken, that mindset will shift. There's a couple ways that you can do that. First of all, many benefits to joining this channel as a member. You can pause and read that if you want, but okay, you can see links in the description of this video to two platforms that I use to trade, BingX and BitUnix. I like them both. BitUnix, if you're in the United States or the UK, you do not need to verify your identity. And with BingX, you don't need to either, but you would need a VPN if you were in the United States or the UK. I recommend both. I have a link to NordVPN. You could sign up for 3 free months. If you would do me the favor of using my referral code for either of these, I would greatly appreciate it, but you do you. Again, I am looking for some longer term shorts to be established sometime soon, and I think any pumps are good for exiting crypto right now. But again, reminder, I am a mega bull. You may think of me as a bear. I'm a delayed bull, okay? And once we turn bullish, I am going to be an absolute moon boy, but I think we need to weather the storm first. But anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.